When you think about your future, you might dream about going to college, maybe becoming a doctor, artist, engineer, or teacher. But there's one thing that can feel scary about this dream: the cost. College can be really expensive, and most families don't have tens of thousands of dollars just sitting around. That's where student loans become part of many students' stories. Imagine you want to buy a really cool bike that costs $500, but you only have $50 in your piggy bank. Your parents might let you borrow the rest of the money, and you'd pay them back a little bit each month from your allowance. Student loans work the same way, except instead of a bike, you're buying your education. And instead of your parents, you're borrowing from the government or a bank. Student loans are money you borrow to pay for college. When you go to college, you need to pay for things like your classes, called tuition, books, and if you live there, your room and food too. These costs can add up to tens of thousands of dollars each year. Since that's a lot more money than most families can pay all at once, student loans help spread out the cost over many years. Here's a real example. Let's say you borrow $20,000 for your first year of college. The money goes straight to your school to pay for everything you need. You focus on your studies, make friends, and learn amazing things. After you graduate, you start paying back the $20,000, but you might end up paying back $24,000 because you also pay interest. That's like a fee for borrowing the money. The process isn't too complicated. First, you apply for a loan and get approved. Then the money goes directly to your school to pay for your college costs. While you're in college, you can focus on your studies without worrying about paying the money back right away. After you graduate, you start making monthly payments, usually based on how much money you're earning at your new job. What's nice about student loans is that you typically don't have to start paying them back until after you finish college. This gives you time to find a job and get settled before you need to worry about payments. But it's important to remember that the money you borrow will grow because of interest, so you'll pay back more than you originally borrowed. Before jumping into student loans, there are some smart things to consider. Try to find scholarships and grants first. This is money you don't have to pay back at all. Only borrow what you really need for essential college expenses. Also, federal loans from the government usually have better rules than private loans from banks, like lower interest rates and more flexible payment options. When it comes time to pay back your loans, you'll work out a payment plan based on your income. If you're making more money at your job, you might pay more each month. If you're just starting out and not making much, your payments can be smaller. The key is to have a plan before you borrow so you know how you'll handle the payments after graduation. Student loans can open doors to opportunities you might not have otherwise. They can help you get the education you need for your dream career, even if you can't afford the whole cost up front. Just remember, you're making a promise to pay the money back, so it's important to take that responsibility seriously and understand exactly what you're signing up for before you borrow.